IDFC First Bank reported its first quarter earnings and they posted a loss of about 611 crore rupees, mainly on the back of higher provisioning that the bank made during the quarter. So Mr. Vaidyanathan is there with us to analyze and help us understand the numbers better. Sir, so asset quality continues to be a pressure point, mainly from the corporate book, because of which you've made higher provisioning as well. So how long do we expect the pain to continue from the corporate book? Because that's clearly overshadowing all the positives. You know, that's the way Morgan Stanley is putting it, that the asset quality pressure points are totally overshadowing all the positives that are visible in your book.
First of all, there are many positives in the book. I'm happy I alluded to it upfront in terms of the growth of the loan book, of the retail loan book, and growth of CASA and so on. We'll talk about that. But with regard to a specification on provisions, basically these are two identified accounts. We had last quarter itself disclosed that we had about 1,461 crores of exposure to two accounts. One is, the large housing finance company, which is in the news, and the second is basically Reliance Capital. And on Reliance Capital, we had closed about 900 crores of exposure. Now, we think that for both these accounts, we have taken a provision of 75%, and I genuinely believe that at 75%, we are adequately provided on these two accounts, and we don't expect to take any more provisions on these two accounts, at least in the near future, anytime in the next few quarters. And therefore, we don't expect to take it, we expect this spate of provisions to ebb from this quarter. Of course, retail-based normal loan loss provisions will continue every quarter.
So that brings me to the next question about the retail segment. So the focus has been shifting there, because if we go by the recent commentary from HDFC Bank coming in, that they have taken some prudent provisioning on the unsecured retail book, and that they are watchful of the segment going forward, especially considering the fact that we are seeing slowdown in as far as consumption is concerned, auto sector is concerned. Is there an issue out there? Do we expect this to be a start of a retail NPA cycle?
No, not at all. We don't expect that. There are a lot of things that are going right in India at this point of time, because collection capabilities have substantially improved because of the analytics. The credit bureaus are working very well in India. So really there is no problem on that front, and the early indicators are not for us disclosing any problem at all on the retail front. In fact, now it's been 8 years at a stretch at Capital First that we built this book, and now the book has crossed 40,000 crores, and it's rock stable every quarter, even this quarter. In fact, this quarter we've taken additional effort of even disclosing the retail NPAs, gross and net NPA, just as a good practice, and that number is also stable quarter on quarter.
So let's break it segment-wise. What kind of behavior are you seeing when it comes to consumer lending? Are consumers postponing their purchases at the retail level? Also talk about the behavior in the urban and the rural markets. Yesterday, a financier told me that in the rural segment, even though consumers are not adding new assets, but they are making their repayments. So what is it that you are observing, and how do you expect the trends to pan out going forward?
See, as you're very aware, you've seen the numbers that are coming in FMCG, you've seen the numbers coming in consumption and so on. So it's all public news. As you can see, some of these numbers are quite tepid and actually mixed, because some companies are reporting good results, up 10-12%, and some are reporting flat. But we at our bank, we are starting off on a relatively small base. So we are not really players of the macro at this point of time, because we are small and we're just growing at about 25 to 30% on the retail side. And that growth should continue in this overall ecosystem.
Okay, so sir, you've reported a small inch up when it comes to the gross NPAs in the retail book at about 2.32% versus 2.18%. Is there a guidance that you'd like to share with us about that?
Yes, if you see an 8-year history again of Capital First, one quarter, up 10 basis points, another quarter down 10 basis points. These kind of movements keep happening, but it's a very steady story there. If you see the net NPA for the quarter, it's actually come down by 10 basis points. So you could read the gross and the net, one is up, one is down. But let me just say that it's stable. If you're asked for guidance for the coming years, we expect retail to continue to behave well because all our internal indicators are showing are quite stable at this point of time.
So what about the MSME segment? Because there is risk aversion when it comes to lending by banks and the other and the NBFCs as well when it comes to lending to corporates which do not enjoy high ratings. So at MSMEs, the condition might be even worse. So recently, CIBIL also warned of the asset quality issues that could erupt in the segment. So what are your thoughts on the same?
Again, like I talked about consumption, I wanted to share with you our consumption book is about 16,000 crores. Like that on the MSME side, we have our loan book is about 8,000 crores. Like I said to you, there is absolutely no problem at all in the repayment behavior of small entrepreneurs. These ticket sizes could be as low as maybe 50,000 rupees and may go up to as much as about maybe crore or 2 crores. In this segment, absolutely, these are grassroots level ecosystem. We are not seeing any problem at all there. If anything, there is a big opportunity there because many state-owned banks are not very actively doing the business. I wish they did, but they're not. And that is giving an opportunity of growth of about 25% year on year, even now.
So talking about the corporate segment, the growth to the industry segment actually outpaced that of retail at the systemic level for the first time in a couple of years. And the large industries saw a lot of credit flowing in. I'm talking about the systemic level credit growth. So what are your thoughts on the same, and where would your focus be on, even though you do tend to increase the retail book to about 70%, within corporates, where would you be focusing on?
Our corporate book as of now is about 53,000 crores. We think they should come down by the end of this financial year by 10,000 crores. And the retail book will go up by about 10 to 14,000 crores, 10 to 12,000 crores. So, therefore, our entire slack of the wholesale book will be taken up by the retail side. On the corporate side, we look for companies which have stable cash flows, have good management, good promoters, and who have a good track record of honoring their loans. So, really, as far as our assurance to our investors and so on, is that incrementally, since we have a good opportunity of lending in retail, on the wholesale, we can afford to be very picky in terms of our growth opportunities.